Good evening, ladies and gentlemen. Today is the 3rd of Feb. It's the weekly expiry. I hope you guys had a good weekly expiry. It was a little bit on the tricky side. And so going into this expiry, first of all, yesterday, you recall I had exited my position right here itself because my idea was that there's a lot of bullishness in the market. Data is building up bullish. A lot of people were writing 17,800 straddle, and I was expecting a potential gamma move on the calls. And that's exactly what happened. And the idea was today also, where despite Facebook giving bad results, global cues being not so good, we were opening slightly gap down, not much. SGX was showing 15-20 points in the negative. That too after being up by a lot, almost at 17,870 there about before US markets closed. So the idea was, in case because of the gap down, there's a little bit of spike in volatility, short that right away. And don't take too much risk also, because we've had back-to-back days of large IV crush. So at the open itself, when the premiums are about 85 for at the money straddle, there's not much risk that's being priced in. And on such days, I never like to take a lot of risk. So my entry position was 17,600, 17,900. And I got okay, all right premiums for it. I got quite good premiums and I entered very quickly. In fact, just 10 seconds from the market open is when I took my entry, because my idea was okay, because of the global sentiment, a little bit of an IV spike, but we closed with very bullish data yesterday, and we might be outperforming because as per what SGX Nifty was showing also, it looked like it wasn't much of a gap down. Anyway, the hypothesis went wrong, but it didn't really matter too much. After entering from the 17,600 and 17,900, had to initially roll down my calls to 17,850 and then to 17,800. And my idea was, so, so about here I was on the 17,600 and 17,800 strangle position. When this particular breakdown happened, I was actually expecting that, we might have made a double bottom here and we'll probably head higher from here. One, because there was previously bullish data, and there was a good amount at that point of time, a very good amount of put writing, which was there at 17,700 and 17,600. So there was almost about 75 lakh contracts, which is why I was like, okay, most likely because global sentiment's bad, everyone expect a down move. Maybe we don't, and we kind of outperform. And Bank Nifty was also looking very strong at that point of time. Bank Nifty was hardly down by 0.15%. Anyway, that went terribly wrong. We had this candle. As soon as this candle was formed, I was forced to take a stop loss on my 17,600 put. I squared it off at about 18 to 20 rupees. My idea was to square it off at 15. So just about here, yeah. Squared it off for 16 and then 15 and then 19, right? So 1920, I squared it off, rolled it down to 17,750, and from there we continued to head down, wherein I once again moved my calls down to 17,750 and 17,700 even at one point. So this is me moving my calls down here. The problem really happened. I mean, had we gone like this straight down, it would have been a great day. I closed up, I would have easily closed up 25 to 30 points had we just gone down this way. But we didn't. We had this massive pullback of 80 points. So as soon as we tested here about, and my idea was, look, there's this gap here, and we didn't completely fill the gap, but we almost went there. There should be some amount of bullish sentiment that that comes in over here. But that wasn't the case. We went up. We again broke this swing over here, made a very, and into this move, puts absolutely got crushed. So just to give you context, the same 17,600 put option. So I had squared this off just as this candle was forming, right? So at 15, 16, 17, went up. Into that move, it crashed back down to 5 rupees. It crashed back down to 5 rupees. From there again rocketed to 40 rupees. Again crashed back down to 5 rupees and then closed at 40 rupees. So it was the kind of day where if you're balancing delta, you're really going to get thrown out. So into that move, got stopped out on the call. Had no option, but okay, didn't want to take additional put side risk because of how much the put option had crashed. Just moved up the call, and immediately we have this down move, which once again blows up the put. So at this point, what I decided to do was completely take my risk off, sell the 17,500 put option and 17,700 call option, and just trail a stop loss on it. And into at 3 o'clock, just about 3 o'clock, I took 1 rupee, which works out about 20,000 of additional credit by moving to the 17,600 call option. So that was the final step that was taken. And also, and done today was an expiry that I mean, I don't know, not much else I could have done very differently. I think if I didn't have this bias, I had a little bit of a bias here yesterday, bullish data. Plus, we might be performing. Plus, banks are looking good. A lot of selling was coming in Reliance and IT, but yeah, maybe it would have played out slightly differently. But I think overall, I was trading between 18,000 and 19,000 sizing. I'm quite happy with how that panned out. And yeah, I hope you had a good expiry as well. This just goes to show you that when the implied volatility is very high, things can really go in your favor, like yesterday and day before yesterday. And when the implied volatility is like crashing continuously, there might be a point where it spikes back up. So especially when you have an expiry day, it's been a budget week, we've made such large moves, and you have at the money straddle opening for 85 rupees, it's not exactly the best time to take much risk. And if you kept your risk appetite relatively low, even if you were neutral, you would have done all right. So that's about it. We've had actually one more thing I'm noticing is that super far OTM Feb call options didn't lose much value today, as much as I would have expected, at least into this kind of a move. So yeah, as of now, it becomes difficult. I would have thought that in this range we will continue to head higher. I don't know if this is a panic thing or if we come back into this range, but for now, yeah, market is tricky to call. And yeah, that's about it. Thank you so much for watching. I will catch you tomorrow. So one more thing, I'm doing this in the format of a summary. One, because I'm posting my positions on Twitter as in when I'm taking it. If the market is getting tricky, I think today after my 7th update, I was like, I'm not going to post updates anymore. It's taking up too much time. I mean, see, most of the time I'm not doing anything. To be very honest, whenever I'm in a trade, I'm not doing anything because I know where I'm going to take a stop loss. I know where I'm going to roll. So in between those times, I'm really not doing too much. Data doesn't change so quickly so much. I'm not observing that, has this changed a little bit. So that being the case, I can post. But if the market starts to become a little bit random and volatile, then I'll have to like proportionately stay away from other social media. So I'm posting there. I'm posting my entire order book on Telegram. And people who want like in-depth, how do I trade, entry changes, that live trading format which I used to do. There's an entire intraday playlist for a year every day that I've traded. I've put it up in that format. People can refer those because there are all kinds of days in that. There are days where we trended up 400 points, trended down, had all kinds of V, W, X, Y, Z shape moves. So that can be a reference. This will just be like a summary of how the whole trade day went, what was the idea. And I'll try to incorporate other aspects into this also. And the idea is over weekend, whatever questions I get frequently, I'll probably make videos addressing those questions. Right? Thank you so much for watching. Take care. Bye-bye.